For years, Wall Street couldn't touch XRP. The SEC sued the company behind it. Major exchanges pulled it. And now, less than 6 months after launch, a single ETF holds nearly 200 million XRP tokens. And Goldman Sachs just disclosed a $150 million position in funds just like it. The ticker is XRPC, and it might be the most controversial spot crypto ETF on the market. XRPC is the Canary XRP ETF. It launched on November 13, 2025, as the first pure spot XRP fund approved in the United States. Canary Capital is a smaller crypto-focused asset manager, but they got there first. Today, XRPC sits at roughly $287 million in assets, leading every other XRP ETF by holdings. The trending angle is the inflows. Spot XRP ETFs as a category have gone more than 2 weeks without a single day of net outflows. Cumulative net inflows since launch are over $1.2 billion. And Goldman Sachs filed a 13F showing about $154 million in XRP ETF positions. That is institutional money moving into a coin that, just 3 years ago, was banned from most U.S. exchanges. Here is how XRPC works. The fund holds physical XRP tokens in cold storage with BitGo as custodian. Each share represents a fractional claim on those tokens. When you buy XRPC in your brokerage, the fund buys real XRP. The expense ratio is 0.35%. That is higher than a Bitcoin ETF like IBIT, but it is in line with the rest of the XRP ETF category. So what is XRP, and why does any of this matter? XRP is the native token of the XRP ledger, a blockchain built for cross-border payments. Banks can use it as a bridge currency, settling transactions in seconds instead of days. That is the pitch Ripple, the company behind XRP, has been making for over a decade. Here is the catch. Crypto Twitter does not want to admit. XRP is not Bitcoin. Bitcoin is decentralized with no company behind it. XRP was created by Ripple Labs, which still holds a massive supply in escrow. Every month, Ripple unlocks a portion of those tokens. That means the supply of XRP is not fixed the way Bitcoin's is. There is also the regulatory question. The SEC sued Ripple in 2020. That case ended in 2023 with a split decision. Programmatic sales on exchanges were ruled not securities, but institutional sales were. The new ETF approval suggests regulators are now comfortable at the retail level, but the underlying asset still carries more political baggage than most. Performance-wise, XRP has had a strong year, but the ETF has only existed since November. You are not buying a long track record. You are buying an opinion that institutional adoption will continue. Who is XRPC for? It is for an investor who already wants XRP exposure and would rather own it through a regulated brokerage than figure out wallets and private keys. It is not a substitute for a diversified crypto allocation, and it should not be a core position. One honest caveat: single-coin ETFs are concentrated bets. If XRP hits a regulatory setback or a Ripple-related event, XRPC moves with it. Diversification matters, even inside crypto. If this helped you understand XRPC, hit like and subscribe for more ETF deep dives. And drop a comment. Are you bullish on XRP, or do you think this ETF is too risky? Until next time, this is the ETF Investor.